Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern and derivative data of Nifty, Bank Nifty as well as the different asset classes. Now first of all, a general disclaimer. This video is only for the education purpose. Please consult your financial advisor before investing and trading. So now, first of all, let us discuss what we have mentioned or what we have discussed in our last video. In our last video, we have mentioned that markets were overbought, highly overbought, in fact, and we had a slightly cautious view, and we were bullish with a cautious stance on the market. We had a strategy that any dips should be used as a buying opportunity. And definitely, market was highly volatile throughout the week. It corrected and then it bounced slowly and gradually and ended on a slight positive note. But still, the markets are into overbought territory. Now, next week is a truncated week because Monday we are having a trading holiday and it is a monthly expiry also. So, definitely, next week is going to be highly crucial. It is going to be highly volatile because most of the uh, trading activity would be focused towards rolling off of the positions from December series to the January series. So, it would be a highly volatile trading week for the next week. So, friends, now let us discuss the Nifty daily chart. You will see the Nifty daily charts on the screen. On the Nifty daily charts, we have mentioned that it has been moving into this particular rising channel, making higher tops, higher bottoms. Currently, it is on the midway. You can clearly see it has exactly tested, or almost tested, the upward resistance trend line. From there, we have seen a sharp sell-off on Wednesday. Then on Thursday, we didn't see any kind of follow-up selling. In fact, we see a counter rally. And on Thursday and Friday, Nifty bounced back and ended on a positive note. So definitely, still the undertone seems to be positive. But again, as you can see now, the important part is the RSI. You can clearly see RSI is with negative signals, but in the overbought territory. But the prices are showing strength. So now at this juncture, it could be highly critical. So now at this levels, maybe 21,000, which is a psychological mark, would be the important level to be watch out for. If Nifty breaks and closes below 21,000, then we might see the extension of correction. Otherwise, we might see highly volatile trading week for next week because of the weekly monthly expiry. So definitely, as of now, uh, I have a view that we might see a zigzag movement or a highly volatile trading sessions in the next week, at least till the expiry. That means on till Thursday. So the trend seems to be positive, but cautiously positive. The strategy should be buy on dips and do not play for huge moves. Just maybe play for maybe 70, 80 points in Nifty and maybe 125, 150 points in Bank Nifty. Just do not try to play huge swings. This is all which I feel could be the trend for at least for the next week. So now let us discuss the important supports and resistance level in Nifty for the next week. So friends, the first support in the Nifty is placed around 21,232 is the first support. Then below that, the second support is placed at 20,976, and third support is placed at around 20,867. On the upside, the first resistance is placed at 21,492. Then second resistance is placed around 21,593, and third resistance is placed around 21,727. These are the important supports and resistance level in Nifty. Traders should try to just watch out this level and trade accordingly in the direction of the primary trend. And the primary trend, which we seems to be buy on dips and just try to play for small moves. So friends, now let us discuss the derivative data of Nifty calls. You will see on the screen. In Nifty calls, the action was seen in 21,400 calls, 21,500 calls, 21,600 and 21,700 calls. Now here you can see there was a slight drop in the option premium. Implied volatility is between 10.22 to 10.30. there was a rise in the open interest, a rise in the volumes. So on immediate basis, we feel that 21,400 would act as an and 21,500 would act as a immediate resistance area. Looking at this particular strike prices, once those particular levels are taken out of 21,500, then we might see the next level around 21,700, where you can see the next major volume concentration at those particular strikes. So definitely still the data is positive. There is no significant weakness seen at this level. So either looking at this particular data, we feel that market might move in a zigzag way, or might move in a range bound or a broad range. So definitely we should watch out for 21,400 and 21,500 on the upside. And if those are taken out, then Nifty might see the extension of rally towards the level of 21,700 mark. Now let us discuss the Nifty put data. You will see on the screen, in Nifty puts, the action was seen in 21,300 puts, 21,200 puts, 21,100 and 21,000 puts. Now you can see there was a drop in the option premium. There has been rise in the open interest, rise in the volumes. Implied volatility is between 10.39 and 12.87. There is some little shedding of the OI in 20,050 strikes, but definitely this seems to be some profit booking in Nifty puts. I mean to say, the smart money has started booking profits. Those who are into writing the out of the money puts, but writing in the puts seems to be a bullish signal for the market. So as of now, looking at to the call data and put, we feel that still the undertone is bullish, at least till expiry, till Thursday. And on immediate basis, 21,300 could act as a support area. If it breaks and closes below 21,300, then there are chances that Nifty might uh, slip down towards the level of 21,000 mark, which is the psychological area, and which could be considered as a important support looking at the psychological mark. So most probably, looking at the technical data and derivative data, the trend seems to be positive. Now, friends, let us discuss the daily charts of Bank Nifty. You will see on the screen, in Bank Nifty, you know, uh, there was the formation of a rising wedge. We have seen a correction of this particular uh, rising wedge. It did see a breakout on the downside, but again, on Thursday and Friday, we saw some sort of counter rally, and Bank Nifty ended on a flat to positive note on the week on week basis. So definitely, the chart seems to be neutral. It seems to be range bound. Overall, uh, price wise, the chart seems to be positive. But I would like to highlight one more thing, which is RSI. You can clearly see RSI is placed with weak signals from the overbought territory. So definitely, maybe in the foreseeable future, maybe in the next couple of weeks, we might see profit booking coming in. But at this juncture, uh, the trend is positive, and if any kind of weakness could be seen, that we will discuss in the future videos. So definitely, now let us discuss the important supports and resistance level in Nifty for Bank Nifty for the next week. The first support in the Bank Nifty is placed around 47,202. Below that, the second support is placed at 46,886, and third support is placed around 46,484. On the upside, the first resistance is placed at 47,932. Above that, the second resistance is placed at 48,219, and third resistance is placed at 48,500. So these are the important supports and resistance level in Bank Nifty for the next week. Traders should just try to watch out this level and trade accordingly in the direction of the primary trend. And again, looking at the charts, we would suggest, or we would recommend, to have a buy on dip strategy. Do not play for huge moves. Just try to play for small views, because small moves, and because market might give both the traders, short traders as well as the long traders, an opportunity to trade. So definitely, now let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 47,800 calls, then 48,000 calls, and 48,500 calls. Now here you can see there was rise in the open interest, rise in the volumes. There was a significant drop in the option premium. That means there is the smart money are writing out of the money calls. That is slightly weak signal at this juncture. Implied volatility is between 11.17 and 12.38. So definitely on immediate basis, 47,800 could act as a immediate resistance. If it closes above those resistance, then there are chances then that the Bank Nifty might rally towards the level of 48,200 to 48,500 in the next week. But as I said, next week is a truncated week and monthly expiry, so we might see highly volatile trading sessions. So now let us discuss the Bank Nifty put data. You will see on the screen the Bank Nifty puts. In Bank Nifty puts, the action was seen in 47,300 puts, then 47,000 puts, then 46,500 puts. Now here you can see there was maximum, the shedding in the open interest, which means that the traders, those who were writing the out of the money puts, has started booking profits, and you can see there was heavy writing in the out of the money calls in Bank Nifty. So we might see some sort of highly volatile trading sessions for the next week. Maybe if there is a gap up opening, we might see again selling pressure coming in at the higher levels. But definitely looking at this particular data, we feel that 47,300 would act as an immediate support. If it breaks, then there are chances that Bank Nifty might drift down to the levels of 47,000, and then maybe the next support could be coming around 46,800 odd marks. So again, overall, looking at the charts of Nifty, Bank Nifty, the derivative data of Nifty and Bank Nifty, we feel that next week would be highly volatile. We might see a zigzag, this kind of movement, where it would be very difficult to trade for the traders. So market might give opportunity to both the traders, those who are those who want to shorts, those who want to go long. But we might not see, the huge move. This move might be of short while, and as I said, traders should trade for maybe 70-80 points in Nifty and 125 to 150 points of Bank Nifty moves. Do not try to play for huge swings, only till expiry. That means till Thursday, because I feel that next week would be, the totally next week would be for the option writers, uh, where the writers would be writing the puts on the downside as well as writing the calls on the upside. So market might move in this manner, maybe in zigzag, and it would be very difficult to trade. So friends, now let us come to the final segment of our show, which is positional call, and identify one stock from sugar segment. The name of the stock is Balrampurchini. You will see on the screen the chart of Balrampurchini. You can clearly see the blue horizontal support trend line. There is a multiple support, 3 to 4 times the stock has taken a support. You can see the RSI was also into oversold territory, and again it is placed with some positive signals. uh, at least you can see a double bottom kind of situation or double bottom kind of pattern in Balrampurchini. The stock is into into oversold territory, and definitely we might see a technical pullback. This could be a slightly high risk trade, because currently the sugar segment as a whole is in highly into the news. So, but looking at this particular pattern, we feel that the stock is on the verge of this particular downward falling channel breakout. And if we see a breakout from this particular channel, then the stock has potential to see a counter rally or a bounce back rally towards the level of 434. So the high risk investor, positional traders, swing traders can buy this stock at current levels, which is 388, and on dips to maybe 382 for an upside target of 434 for short to medium term. Short to medium term means maybe for maybe next 2 to 3 months. Again, I would like to repeat, this is a suggestion for high risk investors and traders. So definitely one should try it with strict stop losses, and uh, once this stock breaks this particular resistance trend line, then we might see stock inching towards the level of 434 in short to medium term. So friends, thank you very much for watching the show. Merry Christmas to all of you and have a nice trading week. Thank you.